Hello everybody, Ignatius L. Jackson CPA here. Hope everybody's doing well. I wanted to chat with you today about the great article that I posted last couple of days in relation to putting your kid on the payroll. As you may have seen in this article, it's a great tax strategy, one strategy that can save you as the parent a lot of money on your taxes and also help your kid start to build wealth in their lifetime. So great strategy all in all, a lot of great tax advantages here. So go ahead and listen through this video if you want to kind of learn a little more about how to do that. And also feel free to take a look at our article that we have posted on LinkedIn, Facebook, and Twitter. So feel free to go through and take a look at that article. If you have any questions, feel free to reach out to us. 480-542-0404 is our phone number. We can definitely help you implement this strategy for 2020. It's too late to do it for 2019 if you didn't do it already. But we could definitely do it starting in 2020 and get you some great tax savings this year forward. So essentially, why is putting your kid on the payroll so awesome? Well, first and foremost, you as the business owner, the first rule of doing this is you have to have a business, obviously. So whether that's a real estate business or whether it's an operational business like a law firm, doctor's office, something like that, janitorial business, something to that extent, you have to first have a business. All right, if you have a business and you can take deductions in that business, then what you do is you hire your kid to do some legitimate work for you. They could be bookkeeping, it could be social media. That's a great thing for these young kids nowadays that are really good with social media, helping you do your social media and all that kind of stuff. You could also do yard work for the rental property, house cleaning. You know, if you got to go clean your houses, you do an Airbnb, you got to clean the houses when people leave for the weekend or something like that. So there's definitely ways to get the kids involved in the business, getting them working and truly earning some good income from the operation. And all in all, if you do this the right way, you as the parent get a tax deduction for what you're paying your kid. So let's say you pay the kid $10,000 as an example for the year based on work they're doing throughout the year. Now again, they do need to actually work in the business. You can't just pay them without them working in the business. That's how you can get into trouble. But if they are working in the business, pay them $10,000. Great thing is you get a tax deduction for that. That's considered outside services essentially. And when you do that, you ultimately get to save yourself, if you assume a 22% tax bracket, $2,200 on your income taxes. Plus, on top of that, if you have payroll taxes that you're paying, you get to save yourself $1,530 in payroll taxes. So all in all, you just saved about $3,700 in taxes, give or take a little bit, based on this one simple strategy of putting the kid on the payroll. So that's why it's such a great thing. A few things to note here. Want to be careful with your whatever state you're in. Just make sure you follow any child labor laws. If their state has some kind of rule against the age of a child and how old they have to be to work in the business, just make sure you're following that. Most states do have an exemption when the child is working for their parent in their own business, but in the event that there is an issue, just know that first and foremost has to be followed. As long as you pay them less than $12,400, in some states a little bit less than that to get completely tax-free. But as long as you pay them less than $12,400, they pay no federal taxes. They pay no payroll taxes for the federal. And depending on your state, they might not pay any state taxes. Arizona, as an example, conform to the standard deduction for federal taxes starting in 2020. Starting in 2019. So based on that, you are able to basically pay the kid $12,400 starting in 2020 without having to pay any taxes at all on what you're paying your child. So they don't pay any payroll taxes, they don't pay any income taxes. You don't have to issue them W-2, you don't have to issue them a 1099. as long as they're under the age of 18. Okay, if they're over the age of 18, you do have to give them either a W-2 or a 1099, and they will have to pay payroll taxes. But if they're under the 12,400 for 2020, then you do not have to. They do not have to pay any income taxes. And again, that's dependent on the state they're in. So all in all, good strategy for your kids, no matter how old. So under 18, obviously, it's a lot more powerful. But over 18 is still very powerful. It's still a good way to have them help out, especially if they're in college and you're paying for college. You know, if you're paying for college already, I mean, why not let them earn some money for what you're paying for college, and then have them pay for it instead of you paying for it. So it's definitely advantageous to go through and do this kind of a strategy. My article goes through a little bit about the process of doing this. Just some key points. Just make sure that, you know, if you're sole proprietorship, you know, it seems simple, but there's definitely ways to mess it up. But ultimately, you do have to set up a separate bank account for each child that you want to pay. And if they're under 18, you likely will have to be the custodian for that account, because most banks want someone over the age of 18 to be on the account. But it can usually be in their name, okay? So, but you do need to set up separate bank accounts for each child that you're paying. You do have to not physically, but you need to actually transfer the money between your business account and their personal account. So it can't go from the business account to your personal account. It can't go from the business account to another business account. It needs to go from the business account to their personal account. Either write a check or transfer the funds. I usually recommend when people are doing this that they set up all the accounts at the same bank, because it makes the transfer of the money very easy and straightforward, okay? If you have an S corporation or a C corporation, there's a whole another step that we have to add to it, because there's an IRS rule that does not allow you to get away with not issuing W-2s and 1099s when you have an S corporation or a C corporation. And so you got to kind of add an additional step if you want to pay your kid that's under the age of 18 to this, and by going through and setting up a little separate entity called, you know, sometimes referred to as a family management company, but really, you know, just any type of entity that is providing services to your business, essentially. So, and when you go and set this up, obviously you don't want to necessarily tell the bank, you know, that it's a family management company. They might get confused. So, you know, say that it's whatever type of business that the child is doing. So if they're managing your social media, it's a social media company. If they're, you know, doing janitorial work or yard work for your rental properties, then say it's a, you know, a janitorial business or a rental property maintenance business or something like that. So just to kind of get them to understand exactly what you're doing. And essentially that other entity, all it really should be doing is paying your kids. So you transfer just enough money to make the payments to your kids. You transfer the money from your business account, your primary business account, to the new sole proprietorship, from the sole proprietorship over to your kids' bank accounts. So definitely a good strategy to kind of put into place. Go ahead and read the article that I have out there. It's fairly thorough, but I definitely still highly recommend, if you're going to do this strategy, work with a professional, talk through everything that you're going to do. Just make sure that your bases are covered. It's always better to be safe than sorry, okay? Because the downside is if you do this wrong, you could end up with a hefty tax bill, you know, and sometimes they don't audit you for 2 years, 3 years down the line. And so, you know, it could be piling up. So you could have done this for 2 or 3 years already, and you find out you've been doing it wrong. Now you're going to have 3 years of tax deficiencies. It could be thousands of dollars of potential issues. So definitely make sure you're working with a professional to get it done correctly. Don't try to do this on your own. But my article definitely goes through some steps and gives you some good thoughts to consider. Once you get the money into their account, what do you do with it? I mean, anything you really want to do. I mean, at the end of the day, Most common protocols here would be go through and either reimburse yourself for expenses you've been paying or let the kid pay for their own expenses. So whether that's, football practice, baseball practice, soccer practice, etc., like sports in general, school supplies, clothes, if they have a cell phone, the cell phone, all that kind of stuff that they're essentially paying for, that you can't legitimately deduct in your business. Cell phone might be one of those that you can actually deduct in your business, but anything that you can't already deduct in your business as a business expense, then that's the type of stuff that you could potentially use from this strategy in terms of what you've transferred to their bank account. My favorite though, and definitely a wealth building master here, is going through and putting that money, or at least some of it, into a Roth IRA. The fact that they've worked for you in your business and you've paid them a fair wage, they now have earned income, okay? That's the only requirement to contribute to a Roth IRA, or any IRA for that matter, but a Roth IRA is more beneficial because they don't really need the tax deduction of a traditional IRA. So, great opportunity to contribute money to a Roth IRA. And like I said in my article, you did not pay any taxes on this money at all. Okay, you got a tax deduction. Kids don't pay any taxes, no payroll taxes, no income taxes, under 18, okay? And you just put this money into a Roth IRA. I mean, I can't think of hardly any other way that we can do something like this. The next closest thing would be an HSA. Would be the next closest possibility to something where you've made money and you don't really ever pay any taxes on it. Okay, so this great strategy to go through and do this. You put the money into a Roth IRA, you let that sucker build for, however many years. I mean, in a scenario I have in here, we said $6,000 a year for 8 years. So you start paying your kid at age 10, which usually is about the age that I would recommend, they're maybe ready to do some stuff for your business. Any younger than that could become a little questionable, but I've definitely heard of some scenarios where it makes sense. You just have to be careful in terms of exactly how much you're paying. But ultimately, start paying your kid at age 10, 8 years down the line, they put $48,000 into this IRA, Roth IRA, because you were paying them at least $6,000 per year, and they basically made the full contribution. Obviously, over time, that contribution will go up, but initially at least, it's in this scenario we just simplified it and kind of left it at $6,000. But over time, that obviously will go up. But you can potentially get even more in there. But assuming $6,000 per year for 8 years, $48,000 total over that 8 years, you got a modest return of 5% per year on average. The stock market in general right now, I think, is doing about 7%. So I've been even more modest than that. So chances are you would have greater returns than 5%, right? But we said 5% just to be conservative. At the end of 8 years, there would be $12,000 of earnings roughly. And if you don't do anything else with that account, don't take any draws from it, don't take any distributions, don't add any more money to it, you would still end up at age 60. I should say the kid would end up at age 60 with $490,000 in the account. Okay, and which only $48,000 was contributed to it, so that's 442% of earnings. 442,000 of earnings, excuse me, not 442%. So $442,000 of earnings, 100% tax-free growth, because they're waiting until age 60, or 59 and a half is the official rule, to take money out of that account. Okay, I mean, just phenomenal. I mean, absolutely phenomenal. If you really needed to, they could take out the $48,000 and use it for something like college, medical expenses, or just kind of whatever might come up over time. But if they can just leave it in there, much more powerful. Or, I mean, mind you, if you do what I love about retirement accounts, which is self-direct, chances are you can get a 10%, 15%, 20%, maybe even more return in your retirement account for this Roth IRA, depending on what you invested in. let's say you invested in some private equity for a company that hits, your $10,000 investment could turn into $1 million. It just all depends on what you invested in. There's so many great opportunities out there to invest. You don't only have to go to the typical stock market, do the mutual fund, that kind of stuff. So putting money into a retirement account, even if you're not a kid, even if you're an adult, is a great tax strategy if you're self-directing it. So if you have the ability to self-direct your account, definitely recommend that you are maxing out on those contributions as much as possible, because this is going to ultimately be the most tax efficient way for you to build wealth. And my next article is probably going to be in relation to, just generally speaking, Roth IRAs versus traditional IRAs and other types of retirement accounts, and kind of what those strategies will be. But it's definitely a powerful tool. So I highly recommend you do that if you are going to pay your kids. Definitely just put the money away for them. It's a great way to have them build some wealth. You're teaching them good values, right? Working in the business. They're learning to work hard, earn a fair wage, and then put that money into good use by doing investments. Make them a part of the process. I know some people that will just kind of hide it from them and not really tell them kind of what they're doing with the money. I mean, that's perfectly fine, I suppose, since you are the custodian of the accounts. But it also, to me, is beneficial if you just let them know, like, hey, here's what's going on. Here's what you got. Now let them know this confidential stuff. You don't just share it with people. And here's why we're doing what we're doing, just so they kind of learn the value of financial literacy, learning the value of money, and the power of saving, and compound interest and all that good stuff. So that's the strategy. Put your kids on the payroll. It's a great strategy. A lot of great opportunity to really help you grow your business, build wealth, and save on taxes. So, I mean, I can't just say enough about this. Love the strategy, excuse me, and love it so much that I made a shirt on it. Put your kid on the payroll. So, definitely let us know if you have any questions. Again, you can reach us at 480-542-0404 if you need help with your small business. So even if you don't have a kid, we would love to help you out with your small business in relation to your taxes, tax planning, structures, any of that kind of stuff. Please do reach out to us and let us know. And feel free to comment, post, share. Let me know if you have any questions. Happy to answer any questions that I can. If they get too complicated, I might suggest that you do a consultation. We do offer a 1-hour consultation for $100. We'll go through quite a bit of stuff in an hour, to where you'll walk out with some great thoughts and plans for your business or for your personal life. Very knowledgeable about a whole bunch of different activities and things you can do to overall just build you wealth for your family. So again, Ignatius L. Jackson CPA, thanks for listening, and we'll talk to you again soon.